Hey Deriv traders, welcome back to another video tutorial. So on the previous lesson, we had a brief discussion on how order blocks are formed from every high or low in the market. But we can't look for trading opportunities from every high or low because we might end up taking those low probability trades. Which brings us to institutional order blocks. An institutional order block is a significant price level where large institutional traders place orders. The blocks represent areas of high liquidity and can act as crucial areas of supply and demand. On the previous lesson, we spoke about BFIs leaving footprints in the market that we retail traders can use to formulate trading ideas. Now, there are two rules that we are going to use in order for us to know whether an order block is an institutional order block or not. Now, previously, from the previous lesson, we understood that okay, supply and demand is formulated from every high or low, and right now we just want to focus on those high probability order blocks. Now, those high probability order blocks are regarded as institutional order blocks because when the BFIs are trading within the market, the main goal is to buy low and sell high. So in a downtrend, we want to be selling high. Why do we want to be selling high? Simply because we want to be selling in and around these areas here, simply because the sellers are in control. So when the sellers are in control, we'll see price getting pushed to the downside. So whenever we have the downtrend, we want to be looking for selling opportunities from where? From bearish order blocks, those institutional bearish order blocks. Now, for those order blocks to be valid, right, there are two things that need to occur. The order block that gets created, it needs to lead to a break of structure. For an example, around this area here, from this initial order block, so we created this high, right? So the BFIs were selling there. By the way, BFI is regarded as big fund institutions. So those big fund institutions, they will be pumping in some sell orders around this area here. And everyone that will be looking for potential buying opportunities from around this area here, because do not forget that we do have a bullish order block around that area there, or a potential area of demand. So at a later stage around that area there, though, whoever will be looking for buying opportunities in and around this area here will become what we call liquidity. Now, whenever price moves, we want to see a grab of liquidity. We want to see an order block creating that grab of liquidity. Now, that grab of liquidity, is created when price breaks structure. So we want to see an order block getting formed, and that order block should lead to price creating a break of structure. So I just hope it makes sense there. Now, once that order block creates a break of structure, another thing on the market structure section, we somewhat learned about the premium and discount tool, and then we want to be looking for potential order blocks that lead to a break of structure that are resting above the 50% level. Do not forget that we'll be having some selling interest whenever price starts trading above the 50% level of a particular price range. So this is our price range. So we're going to wait for price to pull back all the way above the 50% level. Now, once price pulls back all the way to above the 50% level, we want to be identifying some bearish order blocks. Now, on those bearish order blocks, again, like I mentioned, that they need to be above the 50% level in order for those order blocks to be of high probability. Now, the same is true in terms of an uptrend. In an uptrend, the main goal is to buy low. And again, when we are buying low, do not forget that the BFIs will be stepping in from the lows in order to push price higher. And now, in an uptrend, we assume that the buyers are in control. So whenever the buyers are in control, we want to be looking for buying opportunities from the lows. Now, from these lows do not forget that we use these two rules. Now that order block, that particular order block, the bullish order block or the demand zone, it needs to lead to a break of structure first, because from this high here there were a lot of sellers, because do not forget here we have some sort of like supply stepping into the market. So though everyone who's selling in and around this area here should become liquidity, right? Should become liquidity, because at a later stage a lot of people will be looking to sell around this area here, and everyone that will be selling will become what? Will become liquidity. So we want to see price creating that break of structure after creating that order block. So we want to see that break of structure around this area here, and then we want to identify an order block that's resting below the 50% level. So we're going to map out our premium and discount from this low to this high, because that's our current trading range. So we'll be looking for order blocks that are resting below the 50% level in order for us to potentially look for some buying opportunities. And such order blocks are regarded as institutional bullish order blocks. Now, I just hope everything now is making sense, because previously we were identifying order blocks from the lows and the highs, but now as you can see, whenever we are in a downtrend, we want to be identifying order blocks that are residing from the highs around that area there, right? So but at a later stage potentially we might see price pulling back to that particular bearish order block that's resting above the 50% level, and then we're going to look for selling opportunities. So in this case, price has recently created a breakout structure. So what is it that we're going to wait for? We're going to wait for that bit of a reversal around this area here. Now once we get that bit of a reversal, we take our premium and discount tool from the high to the low, identify the 50% level of that particular price leg, identify order blocks that are resting above the 50% level, and then whenever price will be pulling back, we're going to have some selling interest whenever price hits a particular order block that's resting above the 50% level. So this is the area whereby we'll be looking to sell from. Now the same is true in terms of the uptrend. Again, the buyers are in control, so we're going to be looking for potential buying opportunities from the lows, and then whenever price starts creating that pullback around this area here, we identify our trading range from this low to this high, and then we're going to take our premium and discount tool, identify the 50% level. So this is the 50% level there, and then we're going to wait for price to pull back all the way below the 50% level, and then we would have identified an order block. So if price taps into that order block, that's then and only then that we would start looking for some potential buying opportunities, because price is in an uptrend. So I just hope everything makes sense there. Now let's head on to a live chart and we see how to implement these concepts. Now we are going to continue with our previous example. So we have been using this particular chart, which is volatility 75 index, ever since we started with our lessons. Now on the previous lesson I showed you on how to go about like identifying your bullish and bearish order blocks, whether price is pushing to the upside or to the downside. So now we have to be aware whether an order block has significantly created a breakout structure or not. So in this case we have that extreme order block. So I'm just going to start in and around this area here. So I don't want to make this video too long, because right now I'm assuming that you are getting a grasp of things, right? So we have this bit of a demand zone around this area here. So again, last selling candle. So as you can see at a later stage, price significantly reacted from that institutional order block. Now let's see that institutional order block. Do not forget, guys, it should be resting below the 50% level, right? So it should be resting below the 50% level. So let me just edit this, just a second. It should be resting below the 50% level in order for it to be valid. So as you can see in and around this area here, again, we have like a structural order block around this area here. right? So we have that last selling candle around this area here. Now the main reason why I wouldn't advise like picking, let me just remove the premium and discount tool. So as you can see here, we do have that last selling candle, and then after this bit of a pullback here, price significantly took out this high. Do not forget that everyone that will be looking for some potential selling opportunities, because we have that bearish order block around this area here from this high. Everyone will be looking, some traders will be looking for some selling opportunities around this area here, and they will become what we call liquidity. So if that happens, as you can see, this order block here, it's more or less above the 50% level. So it's not a good area to potentially look for some buying opportunities. You need to wait for price to pull back all the way to the extreme, or rather to an order block that's resting below the 50% level, in order for you to start looking for some potential trading opportunities. So now do not forget that here we have a bearish order block. Now when price created this low, do not forget that yesterday we had like mentioned that we have like a demand zone around this area here. So I'm just going to map out that demand zone, or the bullish order block. So we have that bullish order block around this area here. So now this bullish order block here eventually leads to price, creating that break of structure here. Now everyone that will be looking for selling opportunities around this area here, they get trapped, because again, they would have identified that they have a bit of a bearish order block around that area there, and then whenever price returns to that potential area there, and then they would potentially look for some selling opportunities. But as you can see, they eventually get stopped out. So we'll be looking for some potential trading opportunities from an institutional bullish order block in this case, which would be this order block down here. But as you can see, that order block there, it ends up getting violated in order for price to create a in order for price to create a trend change. So which means that now we are no longer bullish, because initially we were bullish. So we would want to be looking for buying opportunities from institutional areas of demand, right, or bullish order blocks. But now, once we create a trend change, it means that we need to start looking for what, for selling opportunities, because the trend has now transitioned from being in an uptrend to being in a downtrend. So we do have this extreme area of, of supply, also regarded as the bearish order block. So price creates a break of structure. So we would have to wait for price to return all the way to the extreme. Do not forget, if ever you want to validate whether your order block is a valid order block. So in this case, we are currently bearish, so we would want to look for some selling opportunities above the 50% level. So you can still utilize the premium and discount tool, right? So whenever price starts trading above the 50% level, do not forget, when we discussed the premium and discount, we mentioned that we would want to look for some trading opportunities whenever price starts trading above the 50% level in a downtrend. So, but we never really specified on when or where specifically to take those trades. So now you know that, okay, whenever price pulls back all the way here, you would potentially look for some selling opportunities. So which means that you would set up a sell limit order around this area here, put your stop loss way above that high, and then you'd potentially look for price to pull back all the way to tap you in before it pushes to the downside. So that's where you'd place your trade. So now, as you can see here, we do have another extreme area of supply around this area here. But unfortunately, in this case, as you can see, price just significantly started pushing to the downside. But here, as you can see, we do have a bit of a break of structure. Do not forget that the condition is that price needs to create some bit of break of structure. Even though, yes, it is minor structure, but it is still a break of structure. So we have this supply, do not forget we are breaking the lows. So whenever we are breaking the lows, we want to be looking for some selling opportunities. So even around this area here, it would have been a nice area to potentially look for some selling opportunities here, right? It would have been a good area to potentially look for some selling opportunities around that area there. So we continued and took out another low, so we can identify a supply zone. So do not forget, guys, right? Another tip is that whenever you identify a supply zone, so for an example, we identified an extreme supply zone here, or an extreme bearish order block price that led to price creating that breakout structure. So whenever you get like price creating another breakout structure, so for an example, you would have anticipated that price will eventually pull back all the way to the extreme order block before pushing to the downside. So you would have placed an order around this area here. But as you can see now, price never really pulled back all the way to the extreme. But we continued creating what? Creating those breaks of structure. So once price continues creating those breaks of structure, you need to update your trading range, because if you would be hoping that price will eventually pull back all the way to the extreme, sometimes it won't, right? Sometimes it won't. But if price eventually leads to another breakout structure, just focus on your current trading range. So in this case, you would focus on this high and this low here, right? So as you can see here, price pulled back to that area of supply. We created a breakout structure. So your new trading range would be from this high to this low. So you would identify a supply zone, right? But as you can see here, price never really pulled back all the way to that bearish order block before pushing to the downside. So, if you wait for a price to do that, you're going to miss out on a lot. Like you need to patiently wait for price to pull back to your order blocks. But if price eventually creates some sort of like a breakout structure, so as you can see here, we created another minor breakout structure there. So where's your trading range? Your trading range would be from this high to this particular low here. So as you can see, price eventually pulled back to what? Pulled back to this tiny area of supply. Price eventually pulled back to this tiny area of supply, and then continued pushing to the downside, right? To eventually create what? To eventually create this minor, sorry about that, let me just remove, to eventually create this minor breakout structure. So we pull back to this area of supply, and then you would have looked for some selling opportunities around this area here. So we created another breakout structure there. So again, you would have looked for some potential selling opportunities. I mean to say, not buying opportunities, selling opportunities around this area here. But in this case, it would have turned into a loss. So we eventually create a breakout structure. So now we have this bearish order block that eventually led to price creating that breakout structure, and then price pushed to the downside. But as you can see, again, we have another structural area of supply around this area here. So the biggest question is, does this structural supply zone, or this structural bearish order block, does it rest above the 50% level? Let's just see. So we're going to take it from the high to the low, right? So according to me, I wouldn't have looked for any trading opportunities here, because as you can see, this box here is below the 50% level. So I wouldn't have looked for any trading opportunities here. So as you can see, guys, this is how you go about like validating which areas of supply or demand, or those order blocks, which order blocks to look for some potential trading opportunities from. Now, as price continued to push to the downside, we have this supply, or this bearish order block, and then price eventually created that breakout structure. So as you can see, price struggled to pull back all the way to the extreme, but again, we do have another structural order block around this area here. So we can ask ourselves, is that structural order block resting above the 50% level? So again, we can validate that through the Fibonacci, or not necessarily the Fibonacci, but the premium and discount tool. But as you can see now, price eventually pulled back, like the pull back all the way above the 50% level. But now this order block here is resting below the 50% level, so I wouldn't have looked for any trading opportunities here. So again, you can do that with the recent price action here, and then try to see on what is it that you can come up with. But now the biggest question is, what happens to these unmitigated order blocks? Because as you can see here, price never really pulled back to that particular order block, right? So what happens now? So what's going to happen? Do we leave those order blocks, or what is it that we do, right? So that's the biggest question. Now, unmitigated. Now, when I'm saying unmitigated, I'm referring to order blocks that price never really pulled back to, and then reacted from those particular order blocks. They are unmitigated. So these ones, they are mitigated. This one is mitigated because price eventually pulled back to that particular order block, and then it gave us a reaction. But on this one here, it never got mitigated. Now I'm going to give you a very huge tip, right? My tip is that unmitigated areas of supply or demand, or those unmitigated order blocks, they at a later stage act as reaction points, right? They at a later stage act as reaction points. So if we can take this order block here and then we stretch it like this, you may find out that price eventually reacts from this particular order block. That's if it pulls back to that particular area here, right? So as you can see, price never really pulled back all the way there. So let's look at another one. Let's look at this one. Okay, let me just pull back all the way here, right? Because now it's going to make sense like this, right? So majority of the time, as you can see here, we do have this supply zone here, right? So we do have the supply zone. It's unmitigated. After price created a breakout structure, it never pulled back all the way to this area here. So it's unmitigated. Now, when the price creates somewhat a trend change, right? When price creates that trend change, the unmitigated areas of supply or demand, they become reaction points, because as you can see on this one here, if we can stretch it out there, as you can see at a later stage, it acted as a reaction point. Now you can look at another one. Let's say for an example, let me just look for another potential example, right? Let me just look for another potential example. But those old unmitigated areas of supply or demand, they potentially act as reaction points to price at a later stage. It's just that right now I'm not having a sufficient amount of data in order to potentially show you some examples. But old areas of supply or demand, they act as reaction points. So as you can see even here, we do have this bit of a demand zone, right? This demand zone, or a bullish order block. So it might potentially facilitate a reversal around this area here, because as you can see, do not forget, this is the recent price action. We created this low, and then we created a breakout structure. So what does this tell us? This tells us that price wants to be bearish, because we have been breaking the lows previously. Now where can we look for potential trading opportunities? We have this last buying candle, which is our bearish order block. So meaning that we would have to wait for price to pull back all the way to this bearish order block before we start looking for any trading opportunities. So if you are a swing trader, and then you can place an order from the 4-hour time frame structure like this. So you can place your order around this area here, and then you would wait for price to pull back all the way to that particular area, and then if it gives you a reaction, and then it would have been a nice high probability trade, because you would have taken your trade from an institutional bearish order block. Why? Because it meets the minimum requirements. The minimum requirement is that that order block should lead to what? To a breakout structure. So as you can see, we do have a breakout structure. Now all that's left is for us to know whether that particular order block rests above the 50% level, because price right now it is currently bearish, showing us that the sellers, right, the institutions, the big fund institutions, they currently have some selling interest. And if you remember, it is a trade that I somewhat like, or a price direction that I somewhat predicted over the past few lessons, that price right now on the daily time frame, it has already traded above the 50% level. So again, it's another thing that we can ask ourselves: price traded above the 50% level? Yes, it traded above the 50% level. And I did mention that right now, when I was showing you an example utilizing the daily time frame, I did mention that right now it is a good time to be looking for some selling opportunities. So as retail traders, it's somewhat impossible to look for some trading opportunities from those higher time frames. But whenever price starts reacting like this, we already know the next possible price direction, right? And then now we just want to join in. How can we join in? We wait for the lower time frame to show us that, because do not forget, on the market structure section I did mention that a price leg on a higher time frame is a trend on a lower time frame. So this particular daily time frame price leg is what is a trend on a lower time frame. As you saw on the 4-hour time frame, we have price creating those breaks of structure to the downside. So now we just want to join in, because now they've already shown their hand that, okay, they want to push price to the downside. All that's required of us, because they left the footprint, all that's required of us is for us to join in on the possible price movement here, which is pushing price to the downside. So I just hope everything makes sense there, and I hope you managed to grab a couple of things. And then on the next lesson, we'll be focusing more on how to go about like stacking up more more rules and so forth, in order for us to get those highest probable areas of supply or demand, in order for us to get those A plus setups. So we'll be looking at how to utilize imbalances, pairing it with supply and demand, in order for us to validate whether price has enough reason to actually pull back all the way to that order block or not. So that's it for today's video. If you found this guide helpful, don't forget to hit that like button, subscribe for more trading tips, and drop any questions or topics you'd like to see me in the comment section. And then lastly, you can click here to watch my recent upload, or click the playlist to watch more content on market structure. Thanks for watching.